So we think there are a lot of great buys here. We would be buying if you have a 6 to 12-month time horizon. eBay is a very strong company, great management. They're buying back a lot of stock. It sells at 12 times earnings. Earnings are going to rise nicely next year and then accelerate thereafter. So you're getting a very good business that's at 12 times earnings, and generally that's a really good way to make money.
All right, so it's up about 1% so far in trading today and otherwise down tape. Let's talk about, Peter, your top pick, which is United Rentals.
Well, you think 12 times earning is cheap. How about 7 times earning? Because that's what United Rentals is trading at. Normally it trades north of 10 times earnings. So this is a classic value play in a very, very simple business. Unlike high-tech companies, etc., this is easy. It's an equipment rental company, and it has been drastically oversold for the past year or so.
All right, so we'll see what we can do on infrastructure there on the D.C. side of things. Maybe that propels those shares. David, your next pick is in the oil field services patch.
So we think oil is at the lower end of its trading range and actually think it's going to start to go up over the next 3 months. Schlumberger is the best oil services company, and the stock has just done miserably. It's down about 28% this year. It's at a 10-year low. Pays a 4% dividend, really good management. We think as oil comes back, this is due for a great catch-up. We think it's got 30% upside easily. All
right, deep value play as oil continues to fall here. Peter, your next one is one of the hottest and now coldest chip stocks out there. Tell us about Nvidia.
Well, unlike United Rentals, which is a classic value play, right, and simple to understand business, this is the opposite. This is a growth story, and it's a more complicated business, right? And I do believe that it's been drastically oversold. Sure, there's some negative news out there about the overhang of inventory, but to us, 2 periods of inventory cleanup, that isn't an infinite time in our world, although that we're so close focused right now, that does seem to take over things. And I really think that within 2 quarters, Nvidia will be back on track.
All right, so that hot chip play back in focus for Peter. And David, your final pick, it's a name that we all know.
Yes, Google. So the FANG group has been devastated. We still think there are a lot of them that are at high valuations, but Google is one that's selling at about 18 times earnings, and if you adjust for cash, about 15 times earnings. This is a really good growth company. They're going to be able to navigate more regulation, so you're getting a good growth company at a really good price. We think you buy here. If it goes down anymore, you buy again. A year from now, we expect it to be 20 to 30% higher.
All right, a long-term holder. And Peter, last one to you. This is a name that many of us have not heard of, and it's international.
Yes, and I picked that on purpose. It's an ADR. It's a Swiss hearing aid company. A lot of research is now finally going into hearing aids. You know, that used to be the stone age of technology where people were wearing aids that were just simple amplifiers. Sonova is progressing on what I would call intelligent hearing. It's using artificial intelligence and one day might even use the Nvidia chip. So it all ties in to a very oversold company that I think has tremendous potential also from a demographic perspective.